Spotify reported earnings after the market closed on Tuesday, and results were pretty solid. Depending on how you're looking at things, whether you're looking at analyst estimates or whether you're just looking at the trajectory of the business, you may come away with different things, but I want to go through the numbers and what we're seeing in the business, where the strategy lies for this company, because this is a stock I have been covering for a very long time on asymmetric investing. Shares are now up over 200% since I started buying shares, but the stock also looks overvalued in a lot of different ways. So where do we go from here? Where is their growth? I'm going to dig into all of that today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's get right to the results and start with the executive summary. The reason to start here is they give the basic numbers in the same exact way every single quarter, so you can get an idea what the trends are for the business. Starting with the user numbers. So they start with total monthly active users. This is premium plus ad supported, but that's now up to 626 million. It's not going to be long before Spotify is a billion user platform. That is just a phenomenal number, and only a few companies can say that they have that many users. Growth was 11% year over year, just 2% quarter over quarter. What Spotify has really done over the last year or two is transition from, hey, we're growing at all costs to we're going to be a profitable company first and we're going to grow second. And that's really what the market has reacted to, is the margin improvements. I'll get to some of those numbers in just a second. But the premium number financially, revenue was up 21%. That's in large part because of price increases that have been put into effect over the past couple of years. Quarter over quarter, that was 5%. Ad supported, this is where I see the most potential for asymmetric returns for Spotify, is in ad supported, not growing that way. So this is still a high potential business. There was a lot of talk on the conference call about moving from branded advertisements to programmatic advertisements. Programmatic advertisements are what you see on Meta or Google. So they're going to start to get to know who you are and then give you personalized advertisements. That's not really what Spotify has done traditionally, but they're starting to move in that direction, beginning with video. I'll get to some of the video things in just a second. And I'm actually going to do another video later this week on their video announcements. On Wednesday, they have an event in LA. They're going to announce some of their video announcements. But just to outline that this is a little bit disappointing depending on how you're looking at things. Gross profit margin, this is where there is a lot of excitement in the market, because overall, this gross profit margin, 31.1%, I don't think that investors thought Spotify could get to this kind of gross profit margin without a tremendous impact from the ad-supported business. So that's obviously not the case. Part of that is driven by the marketplace, and that's where artists are paying to get more promotion on Spotify. But those are phenomenal trends for the company. And again, I'll show some of those trends in just a second, but operating margin now $454 million. That's up from $32 million a year ago. So the improvement on the bottom line is just absolutely phenomenal. Same thing goes for free cash flow, $711 million from $216 million a year ago. Compared to guidance, things are a little bit better than expected. You can see that the monthly active users and premium subscribers just slightly ahead of expectations. Revenue in line with expectations, gross margin. This is, again, what investors are getting excited about, is this is starting to be a pretty solid gross margin business and operating profit business. So for years, Spotify would be generating a positive free cash flow, but losing money on the bottom line because of stock-based compensation. Now we're starting to flip to the company's actually profitable. The gross margin number is really what's the most impressive. You can see these are not on a zero scale, so it's a little bit difficult to see the scale in some of these numbers, but 31.1% in total gross margin, but premium was 33.5%. That was kind of the upper end. 35% is about as high as I think we could probably expect Spotify to go. And that's in large part because they do have to pay artists and labels for the content that they're putting on the platform. That's going to be the case no matter what sort of content you're listening to or watching. But the fact that they're getting up to a 33.5% margin shows you just what kind of price they have pulled out of the business. And I've done videos on this in the past, but I think their bundling is starting to be really successful. Bundling actually allows them to increase prices without seeming like they're increasing prices. So most plans today, at least in the US, and this is starting to be true around the world, are a little bit higher than you would pay at competing services that are music only because they're bundling other services with that. People see that as more value, but it means that it's going to be more revenue and more margin for Spotify. The other thing that's improving is ad-supported gross margin, 13.1%. This is an area where this margin could be 40, 50, even 60% potentially. I'm not predicting that's where we're going to get to, but this is a really low gross margin for an ad-supported business. But it's solid to see that things are getting better. Again, not where it could be, but moving in the right direction. Operating expenses also continue to come down. This is the operating leverage that has really helped the stock over the past 12 to 18 months, because you see spending got kind of out of control in early 2023. They started to cut back on that. So revenue continues to go up, but operating expenses start to come down. That's where you start to get an increase in operating income and free cash flow. So all these things are moving in the right direction for Spotify. Free cash flow, obviously this is going to be downstream of that operating margin, but that's where you see a phenomenal increase in adjusted free cash flow, getting close to 2 billion euros on a trailing 12-month basis. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So compared to a year or two ago, Spotify is performing extremely well because they have the operating leverage that's working in their favor. Revenue continues to grow, not extremely high revenue growth, but you are seeing double-digit revenue growth. That's exactly what you want to see from a business like this. And the platform is flexing its muscle, improving those margins. So that's why investor reaction has been positive to this earnings report. Shares were up about 7% in after-hours trading. I'm recording this late on Tuesday. So we'll see what happens on Wednesday. But I think everything's moving in the right direction for Spotify. But the reality is the valuation has gotten a little bit more difficult. Shares are trading for a forward price to earnings multiple of about 54. Enterprise value to sales is about 4.5. So not a cheap stock by any means, but if the company can continue double-digit growth, maybe move into more markets, bundle more products together, that's why the potential for the video market in particular, I think, is the most exciting thing for Spotify. We'll see what they announce later this week, and I'll be back to cover that because I think that could be a potential growth driver for the company. And we've seen video pop up more and more on Spotify's platform, and that's starting with podcast videos or video podcasts, if you will, to maybe things that are now on YouTube, like this channel, could potentially make their way to Spotify. So we'll see what that looks like, but there's a path to monetize that much better than there is for the current advertising supported business. So that's where the real upside is for Spotify. So core business, kind of steady as you go, steady growth. The upside potential continues to get bigger. Advertising platform not performing as well as I would hope, but there is growth potential in things like video in the future. So I continue to be bullish on the stock. It's a stock I've owned I'm holding on to the gains that I have right now in Spotify. Hopefully we'll have a good end of the year, but I'm a little bit more tepid on these results than I think the market is. So we'll see how things shake out over the next few weeks. Let me know what you think about Spotify's results. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.